Nvidia had an insane earnings beat today, and right now we are up a lot after hours. We're actually sitting right now at about $730. And what we're going to do in this video is go over the actual earnings, but more so why I'm looking at a potential short position here. Now, I want to state by saying I have not gone short on Nvidia at all since this expansion. Since we broke out up over $525, I've been sitting here each and every single day saying to everybody, I highly advise against going short in this instance. The reason for it is number one, Nancy Pelosi was buying a ton of calls, jokingly but also serious. Number two, we have fundamental reasons, a shitload of demand on top of so much more fundamental reasons for this company to continue to run. And the other reason is that we have not really seen any weakness up until the past couple of days. We've never seen multiple days closing, taking out lower lows until recently. And I actually posted a video on X that has over 140,000 views right now, going over exactly what we're going to talk about in this video. And I'm also going to be doing this on SMCI because both of them are setting up in the same exact manner. Now, the first thing that I want to say just about the earnings is that everything was phenomenal. They came in way better than expected. Demand is obviously continuing to be insane. The only fundamental issue that you could say is that they just don't have enough supply and the supply chain issues and inventory to actually keep up with said demand. Now, from a technical level, why have I not been going short and why have I been looking to finally go short as of now? I posted multiple updates today on Tesla and all of these stocks. So if you guys are not following me on X, you need to be following us on X, and you should be a part of our Discord community, which the link is down below. It's only $5 per month. You get access to a ton of content. I don't push it much here because we ended up taking it from 12,000 people and it being free down to 600 people just because there's just too many people, too much stuff. And we really want to focus on quality community and getting rid of scammers and spammers and all of that. My point being, when you look at this most recent swing low up to this swing high here, we're going to take a Fibonacci and we're going to pull it back up into this range. Let's just pretend that today's candle after earnings is not here because right now I actually have earnings on or after hours on. At this point, we see this push up to most recent high. We finally see a low take out another low coming into another low. So we're actually seeing multiple days taking out lows instead of just this massive push, this continued rally. We haven't broken trend. We are still in a very strong uptrend, and we are not trading anywhere near a discounted range at all. Now, at this point, if you know how to draw an order block, or if you just run any indicator that's going to show you an order block, you're going to see one sitting up here. And the reason that there is a block is because we had this push up, taking out all of this structure, taking out all these resistances, coming up and tapping this high here. All right. So on this push up, we have the swing high and we get this pull back down. In most cases, what will happen is we will come back up to test this high. Now, the thing that I want you to understand from just a psychological market level here is that big money, all of the institutions, the Pelosi's, the politicians, everyone who has gotten in between 400, 450, 500, they need to be selling into volume, right? The only thing that's going to continue to push any stock up, it's very simple, is if people will pay more than the person who is selling. If the asks are getting taken out and there's more than enough people there willing to overpay for something, whether you think you're overpaying or not, or I think I'm overpaying or not, if someone's there to take that order out, we're just going to continue to have prices go up. Now, my question to you is, as I've said before in the video last week, if you're a massive institution that is up with calls or just even shares and you're up 80% plus, do you think that you're going to continue to buy into that to help push the market higher? Of course you're not. Who has been buying into this? Retail. And when I say retail, I mean your everyday trader. And even nowadays, which is how we see bubbles form, people who aren't traders, people every day at your work, or the barista or the bartender. And I'm not shit talking that. It just means, and like I've posted many times about market bubbles and stuff, that this is where we get into the delusion, the paradigm, the denial, and we get a bull trap. And that's what I think is going to happen here. I think that we are really up into this denial range. We've seen the peak. This is what I think. And here's the deal. If tomorrow we wake up, right? Because I don't give a fuck about being right. I have not shorted this, and if I don't get the short, I don't care. If tomorrow we wake up and Nvidia is up, gapping up over higher high, none of this matters. None of this will matter. And the reason that none of this matters is that we are not showing weakness anymore. We're taking those highs out. And then we will continue to wait for more weakness and a confirmation of weakness. And if it doesn't happen, then we just don't take the trade. It's very simple. But in these types of bubbles, we will normally see that paradigm, that massive high, a pullback down, which in most cases is what we'll see here. And then we get a buy back up into this range. And in this range, this is everybody who did not get in down here who's thinking, okay, this is my time to get in on this pullback. And instead what happens is everyone gets trapped in this range, all retail, and then it sells back off. If we pull this fib off, in most cases, it will sell at least back down to the mean, back down to usually about the 0.618 or the 0.786. And in most cases, this is where institutions can start buying again, right? Because we're not overpaying for it. And so what I'm looking to do here, if this ends up holding, if we end up opening tomorrow at 730, like $730 range, and we haven't taken out $750 highs, my plan is to go short within that range, within that block, look to take my profit down here at 580, and I'm looking to set my stop loss on a higher high. So if I can let this play out, and if this happens, I'm not forcing anything here, right? We don't, like, Nvidia is not the only thing that we watch. Tesla's not the only thing that we watch. Like, I'm watching so much shit. I mean, today alone, you can see in my trades, we didn't even trade Nvidia. We trade Apple, SPY, AMD, Tesla, Meta. So, like, we're watching so many other things that we don't just have to say, okay, let's just force a shitty position just to get into Nvidia because Nvidia is doing well in the algorithm and content creators are making videos about it. We don't have to do that. Right? Like we're traders. We are not YouTubers. We're not here to fucking dance whenever the algorithm tells us to do that. We're here to be patient. We're here to stand our fucking ground. And we're here to make money in the least risky possible way that we can in a very methodical approach using proper methodology. I don't even know if that's a fucking word. Now, let's get into this aspect of why a trade like this is something that I would look to do, because a lot of you will probably say, Pete, every single day you come in here and you tell me not to short. The reason that I'm shorting in this instance, if this plays out, is because of the risk versus reward. In your portfolio, in your fund, whatever you're doing, however you're treating it, which I do think you should treat it as a fund, you need to have multiple strategies and multiple ways to make money. Specific strategies might only work in a specific market. Other strategies might only work during consolidation times. Other strategies work only during expansion times. Certain strategies will work in only downtrending markets. The point is, you want to have multiple strategies that work that you can deploy in multiple markets so that you're always covered and you always have opportunity. The second and really important thing is to really have two different types of trades, trading styles, in my opinion, I should say, that you can use, I should say, that are not necessarily going to be the day in, day out, highly profitable trading strategy that you're running, but it's going to give you insane risk versus reward and really help you with your overall profit and loss without taking too much drawdown. For instance, if you look at most of my win rates, they're sitting at like 85, 86%. But if you look at my overall win rate, it's only 63%. And the reason for my overall win rate being that low is I do introduce trades like this, which I call tail risk trades, simply meaning that there is a much lower chance of something happening, a much lower chance of this occurring. Instead of an 86, 87, 88% chance, there might be a 40 or 50% chance. But with that being said, there is such an outsized potential return for the small amount of risk that we have to take. We have a 2% upside risk, meaning that if we short this, the max we're going to lose is 2%. And the most that we will probably make if we take profits down at 580 is 22% to the downside. That is giving us an 8-to-1 risk versus reward ratio. And this is why risk is so important. A trade like this, I will take with less than 5, maybe 3% of my total capital, because this trade on puts could make me a 400 to 500% return with a very small loss, meaning that $2,000 to $3,000, maybe $5,000 could make me anywhere, triple that, or I'm going to lose that initial capital. If I lose that capital, it's not a big deal. It's 2% of my overall account and 2% of my allocation capital towards actual options. If that trade hits a 3 to 4, 500% return, that return will be a sizable return in my portfolio. Maybe, a couple, half of a percent on my actual cap. I know that these things don't sound crazy to a lot of you because you're looking at finding such massive returns each and every day, and we do that with trades. But relative to the account, we're looking for stability and we're looking for consistency. And so with something like this, I wouldn't go full porting your freaking account. I wouldn't be taking a massive amount of capital that you have and putting it towards something like this, because there's just inherently a very low risk. A very low chance of this playing out. But the risk as well is so low. As long as you actually can stick to your plan and use a stop loss, the risk is so low that in my opinion, it's more than worth it. Now, if I had $2,000 to trade with and it's all the capital that I have, I'm not touching this. I just can't reliably say that shorting this is going to be smart, and none of us can say that what's going to happen next is going to end up panning out. But what I can say is that I'm willing to risk $2, $5, $6, whatever $1,000 it is, or $100 it is, in order to see if we can reject here and take out $580. It's not about being right. It's not about fucking posting things on YouTube and posting all these returns. It's about just saying, this is what I'm willing to risk to find out if I'm right. I don't control the market. I can't fucking do anything about it. So me watching my phone all day or me worrying isn't going to do anything. So I'm just going to set my entry, set my exit, set my alerts, walk away, and see what happens. And like a robot, execute whatever occurs. I hope this helps. We'll see what ends up happening tomorrow with Nvidia. If all of this means nothing, at least take the risk management aspects of what I've said in this video in your trading every day. Thanks, guys.